Warren Buffett just made something very clear. There's much more opportunity in the stock market than in real estate. That wasn't in the 2000s, that was May 2025. He explained that real estate is slow, complex, and not where he sees the best returns. And Buffett isn't just talking. Berkshire Hathaway has started pulling back from real estate, including selling its brokerage business, Home Services of America. When Buffett reallocates, it's usually not by accident. He sees something shifting. It's not just that Warren Buffett and Peter Thiel are famous. It's that when they speak, markets listen, because they've built empires by seeing what others miss. Buffett has spent over 70 years allocating capital through inflation, recessions, bubbles, and crashes, and built Berkshire Hathaway into a $900 billion powerhouse. He's not driven by trends. He's driven by long-term value. So when he says stocks offer more opportunity than real estate, it's a major signal. Peter Thiel isn't just a billionaire investor. He's a systems thinker, the kind who spotted PayPal, Facebook, and Palantir before the world caught on. When he calls the housing market a structural disaster, he's not talking about next quarter. He's warning about the next generation. These aren't headlines. They're turning points. And they're telling us, real estate may no longer be the safe bet we thought it was. Here's what's interesting. Gen Z is already doing what Buffett recommends, whether they realize it or not. They're not buying homes. They're putting money into the capital markets, stocks, ETFs, crypto, and options. Robinhood grew from 7 million funded accounts in 2020 to over 25 million today. Broadridge reports millennials are on track to surpass Gen X in investment account ownership. And over the past 5 years, U.S. home prices are up 31%, but the S&P 500 nearly doubled. For many younger investors, the new starter home isn't a house. It's a trading account. But this isn't just about returns. It's about access. And right now, that access is broken. The 30-year mortgage rate has jumped from 3.2% in 2020 to just under 7%. Starter home payments are up 20%. Qualifying income requirements are up just as fast. And the average down payment now exceeds $70,000. U.S. Census data shows home ownership among adults under 35 just hit a 5-year low. So where are they living? More than half of Gen Z adults under 25 still live with their parents. In their late 20s, most rent, often with friends or in shared units. This isn't a lifestyle choice, it's economic triage. And here's where the market pressure builds. Demand is falling, but mortgage rates remain high, and that creates a structural squeeze on real estate. 30-year mortgage rates are nearly 7%, around 2.34 percentage points above 10-year treasuries. Fannie Mae reports that 74% of buyers now believe it's a bad time to buy. Meanwhile, U.S. housing inventory is rising, but not selling. In fact, nearly half of listed homes have now sat on the market for over 60 days, according to Redfin. And even though supply is growing, buyer demand has collapsed, with affordability at its worst level in decades. Sellers can't drop prices fast enough to offset high borrowing costs. Buyers can't afford the monthly payments even if prices come down. So listings sit, sales stall, and liquidity dries up. This isn't just a housing slowdown, it's a freeze. And that brings us to Peter Thiel, who put it bluntly, the real estate market is a catastrophe. Rent is the biggest cost for young people, and wages haven't kept up. You get a massive wealth transfer from the young to the old. Thiel calls it a Georgian disaster, where inflation, zoning, and policy failure inflate asset prices without lifting incomes. Here's the breakdown. When cities grow 10%, home prices can spike 50%. But wages don't grow at the same pace. Young workers pay higher rent, not into equity, but into someone else's mortgage. For Thiel, this isn't just a tough cycle, it's structural. Housing, as an asset class, has broken away from its social function. It no longer builds new wealth, it protects old wealth. So what happens when Warren Buffett walks away from housing? And Peter Thiel calls it a catastrophe. And what if Gen Z already figured that out? This might be more than a housing slowdown. It could be the start of a generational wealth shift, out of real estate and into capital markets. If you found this video useful, please like, comment, and subscribe to Global Notes by JP. This is a new channel, and we're building a space for news that matters but rarely gets the airtime it deserves. If you're curious about what's really driving mortgage costs today, check out our video. The mortgage market threat no one saw coming. Link in the description. It explains why, even if Gen Z wanted to buy homes, the bond market might not allow.